Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell, broker with Remax Escarpment Realty, and I'm going to tell you what the howell is going on. Okay, we're going to start with a bit of a different angle this week. We're going to really dig into the economy. What is happening with our real estate market? We know that we're it's tanked right now. The market's way down. We had big price reductions in the Burlington area recently from September to October. The stats are showing the market was down 7%. What is happening? What should we expect in the coming months, next year, and down the road? So I attended a very informative seminar today with Benjamin Tall. He's an economic advisor with CIBC that I've got great respect for. A very, very intelligent economist and very practical in terms of the information. So what is happening in our real estate market is that there's been so much uncertainty in the economy with regard to all the Trump policies and the tariffs and the constant threats from the tariffs. And there's not a lot of reason around the percentages that are being used for these tariffs. It's more trying to threaten countries, trying to create, fear to get countries to move manufacturing, get companies to move manufacturing to the U.S. We recently saw with that Doug Ford and Newsom video with the World Series when they were making fun of the tariffs and Trump went and slapped an extra 10% on. I mean that's not based on anything strategic. It's ridiculous, really. So these uncertainties have been causing a lot of the issues with buyer and seller confidence in the market. Bank of Canada has been trying to help things by lowering the interest rates. The overnight rate is down to 2.25%. They've stated that they won't be lowering that anymore. And the reasoning behind that is because the concern of lowering the interest rate further is that you're going to be driving inflation and not necessarily helping the economy. So the new budget that was just brought out has a lot of fiscal policy, a lot of policy where there's going to be spending into Canada, spending into the economy to try and help things and support things and help the economy grow. So I think that makes a ton of sense because the monetary policy, as I just mentioned, lowering the interest rates further isn't really the answer. So what we're going to be seeing over the next 12 months or so, for 2026, we're anticipating that's going to be a transition year. Things are going to be starting to improve again. We're already seeing some signs of improvement now. The tariffs are starting to get backed off a little bit. But one of the bottom line things that Benjamin pointed out is that Trump is vulnerable and Trump, he does have to back down on the tariffs. So what's going to happen in 2026 is we're going to start seeing those tariffs coming down into reasonable levels where they need to be. And there is going to be tariffs for sure, but they're going to be much, much lower than they are right now. So rather than, 50 or 60 or 70% tariffs, it'd be more like, 8%, 9%, 10%. It's going to depend on the sector, depend on the product area, but it's going to have to come down into what makes sense. And as that starts to happen, as the fog of the uncertainty that Trump has created starts to settle and open up, we're going to see the fiscal policies of our country kicking in. We're going to see the prices start to edge up again. And hopefully we see bond yields and the price of long-term debt start to come down. So we start seeing fixed rates coming down as well. That would be nice to see. And we are expecting that. If we start to see the fixed mortgage rates coming down further, that'll really help to stimulate things in the new year. So one of the biggest challenges we have, especially in the condo market, and just in new construction in general, but in particular, let's talk about the condo apartment market. A lot of the new projects, new builds have been completely put on hold because they weren't hitting their pre-sale targets, so they weren't getting their financing. So one of the problems with right now is that the prices are too low for builders to see a profitable incentive to go and build. The taxation for new development right now, builders would have to pay up to 31% roughly in development costs, making it impossible to profit on new developments. So right now there's really no new developments going on. It's very, very slow, especially in Toronto. Toronto's hit much harder than our local area, but a lot of the developments have been put on pause right now. As the current inventory gets consumed and the demand starts to increase again, and there's no new development, guess what? There's going to be a supply and demand gap. So what's going to happen is the price will start edging up, and it'll be attractive for builders to jump back in. What our government ideally would do in the coming months, coming year, would be to lower those development costs. For example, lower that 31% down to half, maybe 15% or 16%. Make it attractive, make it profitable for builders to get building now so that we don't run into a situation where there's a severe shortage in a couple of years and the prices start ramping up. So there's things that can be done, things that need to be looked at. Look at me. I'm really intrigued and by the economics, and I have a minor in economics. I've got a degree in business, so this stuff's very fascinating to me. He talked a lot about the immigration as well, and one thing that was really interesting that I noted is that 52% of our immigration, based on the chart that he showed, was people that were already living here. So non-permanent residences becoming permanent residents. So they've already got some work under their belt here. They've already established perhaps jobs or careers. So, and they're converting into full-time permanent residents. So immigration largely is coming from that channel. Which is actually shortening the period of time to home ownership because they've already been here a couple of years. So those newcomers have come. They were non-permanent and they become permanent residents. That's the vast majority of our immigration, and so that's actually shortened the time window for being able to purchase property and buy into our real estate market. So that was very interesting information. So we should start to see a lot of that translating into demand as well in the coming year or two. In terms of our appointment center, we're seeing early November market in 2025. It's outperforming the last 2 years, so that's a good sign. But it is softer than pre-pandemic. So right now, the rolling average 10.7 is the 30-day average right now of showings it's taken to get a property sold. We are seeing some sales happening. The numbers aren't much different than they were a week ago, but we are seeing properties that are priced thoughtfully and that where sellers and buyers are open to reasonable negotiations. Those deals are coming together. That's all I got for you today. If you have any questions, please reach out. Love to hear from my fans. Love to hear your feedback, and please DM me anytime.